Hey everybody, taking a quick look at the S&P 500 as we get ready to start March week 3 monthly OPEX week. So here is our S&P 500 roadmap with all of the price levels uh, and text notes removed, just so that we can focus in on the simple moving averages and these gaps that seem to be our main agendas. We've traded, exactly to the point where we've filled some gaps, held support, moved up, and then come in the next day and gap down to go fill the next gap. So these gaps are being cleaned up and taken care of one by one. We left a ton of gaps in our wake on the way up from January 1st, and now we're taking care of filling them. And on Friday, we came down and we touched down gap support right here at the next one down and refused to dip any lower into that gap by more than a few cents. Let's see, our gap here, our low was 27.22, and our gap here was 22.61. So we dipped into this by 40 cents or whatever, and then reversed and came out of it. So we have this big gap left open here, and if we break down through this gap and we do not hold where this gap fills and then reverse off of that, then we kind of have, there are lots of different levels that could hold us in here, but when we take those levels away and we just look at this level, we just look at this chart in its purest sense with the simple moving averages, we could fall all the way down here to the 100-day simple moving average for a back test. 100-day simple moving average was was an incredibly hard spot for us to get through. I'm going to roll the chart sideways here and make you a little dizzy. Follow the yellow moving average was an iron wall of resistance that we could not get through all through Q4 on all of these bounces. And then we come along here in 2019 and we took a couple of days trying to get through it. We, gone up, traded over it, and tested back down through it one more time before finally moving off into our final leg that took us up into the current 2019 high. And now here we are. It makes a lot of sense to come back down just one more time and back test this for support. And what's going on here at the same time is you have this huge event from a technical standpoint that's about to happen with a nice gigantic curving 50-day simple moving average coming up and getting ready to cross up through the 100-day simple moving average. Okay, so the average closing price of about the last quarter, which is what a 50-day represents, is going to rise above that of the last 6 months. So that's really repairing a lot of damage and showing a lot of good, healthy price action in the market when this kind of an event happens. And it's going to be a really bullish buy signal. And what's going to be great is that it's going to be coming after we've been selling off for a while. So it's really setting up a great buying opportunity here for us to get up and get a new leg going and maybe get up over 2,800 and maybe even go after a new all-time high for all we know, since it seems that the United States is the only country left in the world that isn't about to go into some kind of a recession, doesn't have their economy contracting yet. Anyway, I don't want to get off on too big of a tangent. So don't be afraid if we push down one more leg here. I do think it'll be bought, and I think it'll be bought with a vengeance, and I think it will lead to quite a nice rally. Of course, if we do not break below Friday's low, if Friday's low was the line in the sand marked right there, and this gap is going to remain open, then you understand why, okay? That we could not get into this gap, and that they did not want to let price go, and they did not want to let this happen. Maybe there's something to this that they just don't want to let happen. Or maybe we're going to just rally a little bit on Monday and then turn around and fail all this shit on Tuesday and come down here and hit this 100-day simple moving average at that point after we've whipsawed people a little bit. Okay, so in our wake last week, we left a couple of new gaps up above us. We've got one, well, this gap right here is very thin now, but it used to be this wide all the way down here because this is where we opened on Friday. And so this gap was that wide as we started the day. And by the end of the day, we shrunk it this much. And so we've still got a little bit of a gap to go to fill in order to get to fill that in to get to, and that's when we get to Thursday's close. right there, just above Thursday's close, is our 200-day simple moving average. We did put in a close below it on Thursday, and then Friday's rally could not quite make it back. This was why I kept saying all day long, I think we're probably going to go right back up and close above 2750, because if we put two closes in a row below it, that means we're going to be heading much lower. And by much lower, I meant all the way down here. So, you know, that remains to be seen why they did not take this rally just that extra few points and close this gap and close above the 200-day. Well, maybe this rally was fake. You know, maybe this was just people taking money, you know, covering end of the day on Friday ahead of that 60 minutes interview, just in case it incites some kind of a rally in the market instead of spooking the market. Okay, so anyway, we need to fill this gap, and then we need to get through the 200-day, and we need to get through the 20-day, and fill the gap, this little gap that's left here as well, to Wednesday's close. And then we've got the 10-day simple moving average just above that. And as you can see, that's hooking over, that's sinking, and by about Tuesday, that's going to cross down through the 20-day simple moving average. So while we have this golden cross happening underneath us, we have this short-term selling event, bearish cross happening just above us. And it's been a long time since we had a bearish cross. We haven't had a bearish cross since the 10 and the 20-day were doing the tango back here in late November. And then, of course, we had, you know, they were really like tumbling and twisting and turning here. But here was the last time we had the 10-day actually cross down through the 20-day. And look what happened. Okay, I'm not saying that that was the reason that it happened, but that just confirmed, you know, the market not wanting to be long is what that did. Okay, so we don't want to see another one of those happen again, because that could push us off. It would be a shame to rally all the way up to here, have that cross happen, and then fall all the way from up here. Unless, of course, you never got short and you're looking for an opportunity for us to go up higher so that you can get short and ride this back down. Anyway, there are multiple scenarios that could play out. I don't want to go back and forth and confuse you guys. But in any case, those are the things that I would be looking at. And now when you see the roadmap with all of the language filled in here, you see what I'm talking about. Here are the levels all marked that sort of give, you know, a little bit more information as to why we might stop and grind at a certain point. A couple of the big ones are going to be, of course, the 200-day simple moving average. And then moving further up the line here, this is a big point that I think is going to take center stage once we do finally get going again. If so long as this low from Friday holds, when you add that low to the high that we made on Monday and divide it by 2, that gives us our halfway back for last week. And frankly, it's the halfway back for March so far until we make a lower low than the one on Friday. That's 27.78. So, and you can see where it's parked right now, just below that 10-day. That 10-day is going to cross down on Monday's open, and I bet it's going to be below 27.78. So that's just going to make it even harder to advance any higher than this area. So even if this bounce continues on Monday, or even if it goes on till Tuesday, I would be very weary of this 27.78 level. I would be weary of this 10-day coming down and crossing down through the 20-day. And of course, if we do turn around and fall, this is a nice juicy short here, but do keep in mind that when we get down here to the 100-day and the 50-day simple moving averages, I do think that this will end up getting bought if we do push down here. Okay, I hope that all made sense. I hope I didn't jump around too much back and forth, and I hope this helps you get a good start on the day on Monday. We want to focus on this 200-day simple moving average, and if we cannot move above this and hold, then we got to come back and look at, you know, retracing, you know, some of the range from Friday, probably take whatever our high of the day is after we come in, add that to the low of the day on Friday, divide it by 2, and look for a halfway back retracement between those two levels. And if, of course, if Friday's low breaks, we're going to fill this gap and work our way back on down here to test the 100-day simple moving average. That's it. I'm not going to go over it again because I have a tendency to do that on these videos, go over the same information 10 times. Have a good rest of your weekend, and as always, good luck and good trading.